Good morning, folks. We'll be getting this party started at about 9 a.m. So stay tuned. Should be a fun one. All right, we're just about to get this party started in 2 minutes. Thanks everyone who's tuned in. Should be a lot of fun, a lot of ground to cover. Should be an interesting trading day too, with futures bid up this hard ahead of the market open. Welcome to this week's episode of Back to the Futures, live order flow analysis with me, Markets and Mayhem, and we're going to be talking about what's going on. We're talking about what's going on across the markets here. We have a big bid coming into today. A lot of this is built on excitement overnight and from yesterday, really from the Sunday Globex Open, Trump talking about trade tensions with the EU coming down a bit. And that's got the markets quite excited. We also heard from the EU They're saying basically we've got to pause until early July to work out that threat of a 50% increase on tariffs for the EU. So that's got animal spirits pumping up a bit. The question becomes, is this going to be a continuation day, or are we going to fade this out from the open? So that's going to be something we'll be talking about as we get through this presentation here. Just a couple different slides to go over. Once we get through them, we'll go right into Bookmap and look at a couple different instruments, and then we'll start taking some questions from folks out there. And the Bookmap folks would love for you to join them up on the Discord. Lots of cool stuff going on. Regular educational live streams, great support for the community, and a lot of cool traders to meet over there too. So definitely check it out. You can visit discord.com/invite/bookmap or use the QR code on screen. And if you'd like to check out a free class, Bookmap released the supply and demand setups class on their learning center at bookmap.com. So check that out. You can use the QR code on screen or that link just near the bottom. A little bit about me. I've been trading for 20 years. Believe it or not, it has been an amazing part of my life's journey. Had a whole lot of fun along the way. Early on in my journey, I was also fortunate enough to really encounter some incredible mentors. Folks in growth investing, value investing, traders, analysts, and that helped me to grow. That helped me to learn a lot faster. And so one of the reasons I joined social media and that I share as much as I do is because I want to pay that forward. I really think that one of the things that divides us from whether or not we're a successful trader or we struggle is that early part of our journey, forming those good habits, getting out of the way of trouble, making sure that we're not just putting it all in on black and playing roulette, right? This is a business we're running. I might make light of, the idea that trading can be a bit like gambling, or that technical analysis, to some, it seems like astrology for gamblers, right? I get that. But the reality is that if you put the effort in, you can be successful at trading and at investing. Without that effort, however, if it becomes more emotional, if it becomes about getting your money back from the market, that idea of revenge trading, you're going to get hurt. There's really no two ways about it. So I think that trading is best seen as a business. We're capturing the spread between inventory that we're buying and selling. Doesn't sound so sexy when you put it in those terms, but that is the reality. And like a business, that means we need to be capitalized. So that means not putting it all on black or red. It means really, if you want to have staying power, making sure that a single trade doesn't reduce your portfolio by more than 1 or 2% of total liquidity. So that humbles one's idea of massive position sizing and leverage and all that. On the other side of it, it builds the idea of consistency and treating this more like a business. Buying underpriced inventory, selling overpriced inventory, rinsing and repeating that cycle is really the basis on what trading is built on. So why do I watch order flow? A lot of order flow tools, analysis, focus on things that are called deltas. And deltas are just a Greek word for difference, right? So if we're talking about the difference between buyers and sellers, that's expressed in the form of a delta. Some of those deltas can give us a sense as to where the aggressor is on the tape. So with Bookmap, for example, you see these large bubbles. The bubbles represent where there are deltas on the tape, those big green bubbles showing you green aggression, buyer aggression, red bubbles, seller aggression. Similar with the session volume profile, although instead of a specific point in time, we're focused on a price throughout the session, similarly showing us the difference between buyers and sellers. That's one area that I think is important to focus on. Whether you're day trading or swing trading, those deltas can give you an idea as to who's taking control, as to where there's aggression, and that can help us better map out where we may want to be taking risk or taking off risk. Another area to watch, large passive order flow, particularly in the futures. There's a lot of ways to infer what might be an iceberg, looking at volume profile and saying, well, look at that big shelf there and price just got up there and just sort of went sideways for a really long time. We're assuming there's icebergs there. That's naive inference that doesn't necessarily give us the color that we need. What I mean is, wouldn't it be better to know by looking at the order flow as it's happening whether those are icebergs? Well, that is possible. MBO is a part of the data package that I have on Rhythmic. Bookmap data has it directly as well. And this allows you to see icebergs and stops. If you optimize the way you visualize that data, you can see the really large ones. And I'll show you how once we get into Bookmap. So you can tune it up if you have icebergs and stops enabled to only see the icebergs and stops that stand out on the tape. Often is the case, really large icebergs, for example, on the S&P 500 E-mini futures contract, we're talking thousands hitting the tape in a short period of time, can mark the potential for a reversal building, particularly if you see stops going the other direction. An example being, let's say you have a big run higher. A bunch of shorts get blown out, so you see those buy-side stops hitting at market. While that's happening, let's say you see 2,000-3,000 icebergs on the sell side fading that move. That may give you a sense that this move could be in its early stages of reversing because the flow is certainly there, suggesting there's some bigger desks getting out of the way. Often people ask me, well, what is an iceberg? That's a great question. An iceberg is an order type where you're hiding the total size that you want to move. So let's say I need to move 1,000 S&P contracts. I may only want to show 200 at a time. Because if I show 1,000, that may scare away price. If you believe that markets function like a three-way auction, supply excess leading to selling, demand excess leading to buying, and equality between the two leading to consolidation, then if you think about, well, what does a big sell iceberg look like if you're sitting there on the tape with a big limit order? If you're showing that full 1,000 order, you may scare away buyers. You may not see that order realized as soon as you want or at all. However, if you're just showing 200 on the offer, you're much less likely to intimidate folks that are looking to get up and through that area of price. Now, what happens when you get hit? Well, that first 200 lot will get pulled off the books. You'll have 800 left, and there'll be 4 more orders to execute. After that first order is executed, you're kicked to the back of the queue. So if there's other people ahead of you at that price, they're going to get executed first, and then it's going to come back to you on the iceberg. So the advantage is you get to hide your size. You get to execute with the hope that you have less impact on price, but also that you don't scare away the folks that are going to come and release that liquidity from your order, right? So think about that. Versus, say, going in with that 1,000 offer and maybe not getting that fill. That's the motivation for the iceberg. Obviously, the downside is that you're going to probably spend a little longer getting that order filled if there's a big queue, which is an okay sacrifice to make in my view. I've used icebergs myself largely when I'm trading single stocks and I've got large size to move around, and it helps. I can see the reaction in the order book being much more muted to that hidden size versus just showing the full size you want to move or just stacking the order book with, limit offers at different prices or limit bids at different prices. So I would say if your broker offers it and you move reasonable amounts of size, icebergs are something to consider. Lastly, exhaustive trading action. Sometimes this can happen when you see a huge amount of sweeps coming through, completely wipes out the book right near price, and you see folks get a little bit ahead of themselves on that move. Typically, there's a large amount of volume in an exhaustive move. I built some indicators to help identify this in futures contracts. So I have an audio alert that goes off and a visual alert that goes off identifying that exhaustion. That also helps because, that way you're not necessarily just staring at the chart the whole time looking for it. But those exhaustive trading moments, when they happen, and sometimes you could just see it on a candlestick chart, you get a big move higher and then it wicks, right? And it starts to reverse pretty immediately lower. That's another way of looking at exhaustion or a climax in buying or selling, for example. So these 3 types of order flow analysis, and there are much more than that. This is just 3 areas I like to highlight to give you a sense of areas we could focus on that can be consequential to price discovery after we see these things. Big deltas, big icebergs, and exhaustion events. Now let's take a look at the S&P 500 futures technicals here. And we've been trading in this big range over the last 2+ weeks. The top of that range, just around 59.97 ES. The bottom of that range around 57.32.75. And all four of these major pivots have been consequential in price discovery. That 59.97 kind of marking the top of this range, and that 57.32.75 just about the bottom of this range. I think that we're largely range bound for the moment. That doesn't mean we can't get pulled higher. If we can get some bullish news coming through, some actual trade deals, for example, we know that moves the market. They love to see it, especially if it's some bigger trade partners. Imagine if we had a headline with a Chinese trade deal. Doesn't seem like much is happening there, but if it did, that would be one of those potential catalysts that could really move the market significantly. So for now, coming into today, looking at 58.39.75 as a big area of support and 59.27 as a big area of resistance. And just overpriced right now is also this 59.14 Gamma 2 level. That's from the SPX options converted to ES levels. That can be a bit of a magnet. These Gamma levels tend to exert magnetic influence. So to see price get pulled into it, similarly, as we saw, really over yesterday's tape, that is a possible scenario. And if we look at the Ichimoku cloud, we can see we are trading within that cloud. What that tells us is that we are in a trendless state per Ichimoku analysis on a daily time frame. It means we're not in an uptrend, we're not in a downtrend, we're more in this consolidation phase, which builds into the idea that we are still a bit range bound. Now, if we push through 59.27, build acceptance above the cloud, I'm going to say the path of least resistance is pushing above and making a new high. That 59.97, I think, gets pushed through on a move like that. But for now, we need to respect price action. And coming into the market today, we do see futures selling off just a little bit pre-market versus their overnight highs. And SPX 6000 is going to be a big magnet level. So if we do get that push higher, some kind of positive news catalyst, you can see, A, it's a large wall of calls. You can see that there in the excess of calls versus puts. But even when we look at both together on the same chart, that is a very, very large level of gamma exposure. It looks like it might be part of a larger box trade between SPX 6000 and 5000. But either way, when you see that level of options interest in a price level on both sides of the tape, puts and calls, it can be magnetic. So if we do push above that 59.97 level, the next rational level to get kind of pulled into and find resistance and stickiness to sort of set up room for consolidation would be around SPX 6000, which I think is around ES 6015 or so. And here are some of the key SPX options visualizer levels to watch this week. We talked about the call wall at 6,000. Above that, we've got 60.50. That's kind of a weak resistance area, and then a very strong resistance area at 6,100. Below us, we have 59.05 and 5,900. That confluence area should provide some support here. And Gamma Flip just down there at 58.67. So we'll be watching that as well. We know price likes to interact with that Gamma Flip level. It changes how dealers are likely to hedge as well. When you're going into positive Gamma, it's more likely that you have vol compression. That is to say, it's more likely that dealers are going to sell rips and buy dips. And in negative Gamma, you have vol expansion or chase dynamic, where dealers are more likely to buy rips and sell dips. So it adds to the potential of bigger moves and more chop. And then finally, we have the vol trigger down at 5,800. If we did push below that and build acceptance, it would set us up for greater volatility and a continuation of that move lower should it happen. And then if we look at triple Q, I've just added this to the options visualizer, as well as SPY, NQ, NDX, IWM, and soon we're going to have all the optionable stocks. But for now, Triple Q options visualizer levels, we got the call wall at 525. I'd be watching that level as major resistance. Got the gamma flip at 512 and gamma 1 at 510. That confluence area likely to be pretty significant support. And then just below it, 505 is an area of large put interest, and then the put wall, the largest area of put interest near price, at 500 along with the vol trigger. So NASDAQ bulls really don't want to see QQQ fall below 500 on a closing basis. That sets up room for continuation lower. On the other side, really want to see a push above that call wall to set up some continuation for a move higher. And in particular, if we can get above the call wall in key 1, that likely sets us up for some serious range expansion to the upside. And weekly pivots, this is new. This is multi-asset pivots. I wanted to do something a little bit different this time around, have a little fun with this. And I'm just going to take a moment to share this on social as well, because I feel like folks might want to come back and visit this later. So I'm going to take a screenshot of this and just put it out there on X real quick. And folks, if you're enjoying the stream, feel free to share it out wherever you're watching it so that other folks can enjoy it and benefit from it as well. And moving right along, we've got some really cool exclusive deals going on. If you'd like to check out Bookmap, feel free to bookmark this link for later, traderaid.com/bookmap. That's traderaid.com/bookmap. You can get up to 40% off, 40% off. That's a pretty big deal just by scrolling down to the special offers on your first billing period. If you'd like to check out what we're doing at TraderAid, including our exclusive cutting-edge trading tools, our awesome community ideas and analysis, you can get up to 20% off your first billing period of TraderAid by using the code Mayhem20 at checkout. And now we're going to dive right in to Bookmap. So give me one moment here. And while this is firing up, I'm going to just check around for any questions that you all have. Jay Global says, good morning all. Good morning, Jay Global. Irfan Ahmed says, how to know coin will go down or up, price action by Bookmap. It sounds like you're looking for clues as to whether Bitcoin is going to move higher or lower based on Bookmap. I would say that it's the same idea that we're talking about with really any other instrument we're trading. We want to see, for example, to move higher, an excess of demand versus supply. We want to see constructive momentum, and we want to see catalysts out there. For example, if rates are coming down, if the dollar is coming down, that tends to be constructive for Bitcoin here. We can see Bitcoin now trading above this point of control. That's really where the buyers take control of the tape, and they have a bit of an upside advantage. So we can see that as we broke above the point of control, we got some additional momentum. We can see that there is more buy-side aggression here. Look at the large green bubbles on screen showing that buyers are showing some additional aggression here. And then let's also just take a quick look at the outside liquidity on this futures contract. You can see there's an excess on the bids by about 1.4 thousand. So that's a delta of 1.4 thousand bids versus offers. So overall, the Bitcoin contract looks pretty constructive. Even volume up here is showing you a delta of about 8% greater on buyers than sellers. So overall, you know, this is constructive. There's room for a move higher here, and you can see there's pretty strong interest at 112,000 with that 153 on offer. So if we're looking at this from auction theory, I would say that's about where I'd want to get off if I was scalping this. If I was scalping this breakout from the point of control, I'd be looking to sell just under 112. I don't want to necessarily compete with the other folks that are up there, so I'd probably put my offer below it by about 100 or 200 bucks to increase the chance of being filled. So let me know if that helps. It's a kind of quick overview. Hey Sachin, thanks for tuning in, my friend. How are you doing? And we've got just about 9 minutes left until the trading day starts. Let's take a look at a couple things here. I'm going to just, since we're talking about Bitcoin, another thing that I think is cool to show here, these are the pivots that I built for Bitcoin. And I've got these pivots built out for a number of different asset classes, pretty much any futures contract at this point I can build them out for. These are swing pivots. So these are going to be pivots that tend to be more consequential over longer time frames. And you can see we're building above 110,560. So what does that tell you? It tells you that we're starting to make a potential push to a new all-time high on Bitcoin. If we can build some acceptance up here, I think it's very likely that you see that new all-time closing high on Bitcoin this week. If not, maybe even sooner than that, maybe even today. We do see some pretty juicy price action. So watch that 110,560 on the upside. And then if we do see some downside pressure, watch 108, 185 on Bitcoin. Good morning, Rainy Days. And Ships asks, what are your thoughts on gold? You know, I like that question. So we're going to take a look at it from a couple different angles here. First, we talked about multi-asset class pivots. So I'd be remiss not to bring this chart right back up on screen before we zoom in. These are my pivots for gold. Feel free to screenshot this, save it for later. These are going to be actionable for quite a while to come. They get refactored regularly, but the big major pivots don't tend to change too often. And I would be looking for gold to get up to 34.10 before I see really big resistance overhead. We could see the swing model sold some of those highs above there. We'll see if this time is different. We are coming from a lower base, so that does make it look more like consolidation than continuation. I would need to see acceptance built above 34.10 on a weekly closing basis to tell me we're out of the woods on that downward move in gold and we're breaking out of the consolidation. Per Ichimoku Cloud, we're still in an uptrend, so that's constructive. But overall, I think gold has a very good chance of hitting $4,000 by the end of this year. And the reason I think that is gold is an uncertainty hedge. It's not really an inflation hedge. If we really look at the way gold behaves, the way it protects its holders, I can't really say investors because gold doesn't really produce money, right? It is money. So for the people that hold gold as a hedge or as a form of money or as a protection against debasement of currency, which I think is less effective than an uncertainty hedge, the point is this. As there's growing uncertainty geopolitically, or with the ability for the U.S. government to pay back its debt, or with the global trade war and the tensions that have come from that, or with other areas like how the world economy may not grow as much this year, all of that uncertainty, whether it's policy, geopolitically, economically, in the markets, or otherwise, tends to be a tailwind for gold. So I'm still constructive on gold. If you follow me on Twitter, you'll see that not long ago, I think it was last week, around the lows in gold, I was saying I think gold is ready for its next leg higher. And the reason I was saying that was it was getting beaten down, but then I started to look at sentiment, flow, and positioning. And what I saw in those three areas that I like to watch for everything I trade was sentiment was getting beaten down, flow was running away from gold, and positioning was no longer stretched. Buyers really de-risked out of gold. So to me, when you see that sort of healthy reset, sort of like you're, shaking the tree a little bit, you're getting some of the weak hands out of the trade. That's what I like to see. It's a healthy thing. What wasn't healthy was when gold was trying to go parabolic. That scares me. So I was actually very relieved to see this selling, some consolidation, regrouping, and now building up for a move higher. That's exactly what you want to see in anything you're trading, especially something like gold or Bitcoin, where it's largely based on psychology and momentum. You don't want to see things just go straight up because likely it is that they will crash. You want to see things build price higher in a more constructive, like stair-stepping type of pattern. Up, sideways, up, sideways, up, sideways, correct a bit, consolidate, and then continue. That's a much more constructive pattern that has staying power. And gold is doing that. It reset the excesses and it didn't get full on into rocket ship mode. Now, there's another thing I like to look at on gold, and it's called Bollinger Bands, right? So if you look at Bollinger Bands on gold, it's a really helpful way to gauge your momentum. And I'm going to show you guys a little trick that you can use if you use stock charts that can make this really easy to judge what kind of environment you're in with gold. Okay? This is a chart that I created a while ago. You can see with where I showed the breakout initially, right? This is the squeeze, okay? This is what happens. So Bollinger Bands are a great way to visualize price range and, in that mindset, volatility. When Bollinger Bands squeeze together, that's during a period of consolidation. Consolidation generally is like a spring. It's coiling up. There's energy that's building here. So when you take a spring and you push it together really hard and you release it, it's like that just bounces out. It releases all that energy you've put into it. Think of a squeeze in Bollinger Bands on something like gold the same way. You're squeezing that energy in. And when it breaks out of that squeeze, when you see the Bollinger Bands expand, and you can look up here, you can see the Bollinger Band width up here. So there's the squeeze, there's the breakout. This breakout is continuing. The band width is continuing to expand. So everything that gold is telling us right now, hugging the upper band, that's healthy. I know a lot of folks look at Bollinger Bands and say, oh, you got to just sell against the bands and buy against the bands. That may be true for some asset classes. But for gold, what you really want in a Bollinger Band expansion is it hugging the upper band and even pushing above it. That's telling you there's continued momentum to the upside. So gold still meets all my criteria for being an asset that I want to have exposure to. And let's just take a look at gold this morning from the overnight session. So a little bit of chop from the overnight, kind of regrouping. It's made some new lows recently, trading just around the point of control. And again, some consolidation here is healthy, but my overall sense with gold's momentum, based on all the indicators I look at and based on Bollinger Band squeeze breakout theory, this thing has room higher. It's going to consolidate and then break out to the upside. And that near-term resistance that I'm looking to see a breakout above and build acceptance is 34.10. So hopefully that's helpful for you, ships. Good morning, iBomb. I'm just going around checking to see if there are any other questions out there right now. Just give me one moment here. Oops, that's that chart. Cool. All right. I think those are all the questions we have at the moment, but as they come in, I will do my best to get to them. And we're just about to get to market open here, about 20 seconds away. So we're going to now move to the S&P 500 futures contract on screen. And we're going to zoom out just a little bit. We can see overnight, it's been sort of chopping sideways. Earlier, there was some downward range expansion. Then we kind of pushed to the top of the range. Now markets are opening, and it looks like we're making just a bit of a push lower. And my question this morning that I posed on Twitter was, what's going to happen with this move overnight? Are we going to get continuation, or are we going to see some retracing? because a lot of this move is basically just another extension of trade talks. There's not necessarily a lot more to it. So now the rubber meets the road because the folks that run the bigger trading desks are back from the Hamptons. You know, a lot of folks leave in these 3-day weekends, Tuesday or Wednesday before they start. So a lot of those folks are back in Connecticut, in New York, at manning those trading desks, making decisions. It'll be interesting to see what they make of this move. Let's zoom in just a little bit here. And we are starting to make a push below the vol trigger on S&P 500 options. If we do get a continuation lower from there, that does set us up for both a more erratic tape and also some downside continuation potential. It's early yet, though. I will caution folks, that first half hour of trading especially, there's such a cross current of institutional order flow. The first and last half hour of trading are by far the busiest parts of the trading day most days. The exception being days where there's all kinds of event volatility catalysts, something like the Fed or Trump randomly coming out and making some kind of crazy announcement. That can obviously shift the volume flow a bit towards wherever that event is, being the sort of the focal point of trading. But by and large, statistically speaking, it's the first and last half hour of the trading day that are the busiest. And we're watching that institutional flow. And so far, we are seeing some downside. I'm just going to switch screens for a second to show you all something else here. This is going to be the S&P 500 pivots that I watch. This is a tool that I built that we have on our TraderAid Discord that helps us to map out some of these key levels. And we could see we're testing 58.83 this morning after failing 58.96. You could see how clean these are too. You know, not to talk my own book too much, but I really do love these pivots. I find them extraordinarily helpful for my own trading to manage risk. And below here, we're looking at 58.71.75 as the next downside pivot to watch. So some of this overnight move that started on Sunday night with Trump coming out, I think it was on Truth Social, that's where he does most of his public communications these days, coming out and saying that they were making progress with the EU, that they were going to, extend the tariffs, the 50% proposed tariffs on European exports to early July. I think it was July 9th. That led to the markets popping as soon as Globex opened. There was this sort of gap up into that. And even before that, the EU's leader, Ursula von der Leyen, I think she said similarly that they were making progress on trade. We'll see where that actually goes. There's also something to be said about the long end and how much it's misbehaving here. That is to say that, no one in these respective governments where the long end is running out of control wants to see this, and there's probably some motivation to do whatever it takes to try to get that under control. We already see that in Japan, where their policymakers are trying to get away from selling bonds and actually trying to get back into encouraging something that will probably resemble yield curve control as the year goes on. I think we'll get back to that in Japan. I don't think they have much of a choice, quite frankly. And we're getting down to that 58.71.75 pivot here. That's the next area of support I want to watch on ES. We could see we've pushed below the vol trigger, and we do have some stop outs happening for some of these smaller players. These are sell stops. So these are buyers that had gotten involved earlier and got stopped out. Another thing we talked about earlier, remember we talked about buyer exhaustion? This is a buyer exhaustion print right here. These two circles with the 799 volume above it. That was followed by a large amount of buyer aggression and then this move lower. So the exhaustion prints can also give you a sense. Buyers kind of spent their fuel right out the open. And ever since that exhaustion print, we've been moving lower. And Ship says, thank you, teacher. You have such a great way of explaining things. It's so helpful beyond a doubt. Thank you. That's really kind of you to say. That's what it's all about. Just trying to pay it forward, share, some of the knowledge that I've been able to amass over the years. I was, again, lucky enough to have some great mentors early on in my journey. And if I can help other people accelerate their journey and have a better chance of being successful as a trader or an investor, that makes it all worthwhile to me. And we are pushing below that 5871.75 pivot, opening up 58.62. 5862.75 on that next pivot level to watch. So I'm just going to bring that up on screen here. We can see the pivot chart, and we can see that we're likely building acceptance below this 5872.25 pivot. Could get pulled right down to 5862.75 here. So worth watching here. The order flow continues to suggest lower prices. You can see it in the aggression here too. Sellers are not afraid to push. And when they push, buyers are not pushing back much at all. You can also see it in the delta volume candles down here, all dominated by red with just a couple blips of green. And also overall iceberg flow. These are the icebergs I was talking about. Nothing too big hitting the tape, but little drips and drabs of icebergs bringing down the aggregate of iceberg orders since the open, now at negative 690. Now I'm going to show you real quick how I have my iceberg set up if you want to have something like this on your own chart. So you go to stops and icebergs on chart. You have to have the MBO data package, whether it's through Rhythmic or Bookmap. And then you want to use a 90-minute interval and a 10 standard deviation multiplier. And then you want to clean up some of the things you don't need. I get rid of cancellation icons, event volume, and event type, and I color code the icebergs and make them a bit bigger so they stand out. So something to think about if you're using Bookmap. You want to have the icebergs on screen, but you don't want them peppering all over the place and just really want the big ones to stand out. That's how you do that. You can do the same exact thing with stops, and then I also layer in the idea of just only showing stop runs so that those stand out. Getting a little bit of a pop above that 5871.75 pivot here, but overall the trend still seems to favor sellers. What would change my mind on that is if we're able to get out of this pattern of making lower highs and lower lows. Because right now the micro trend is very much lower highs, lower lows. I'm just going to fire up my news feeds real quick, so give me a second. Not too much of interest coming across the tape here. One thing, quote, just before the market opened, Trump says, I was extremely satisfied with the 50% tariff allotment on the European Union, especially since they were slow walking. I have just been informed that the EU has called to quickly establish meeting dates. This is a positive event, and I hope they will. Again, this coming from Truth Social. And the Fed's barking as we are back on the Fed speaking tour as if that ever really ends. We're just always inundated with Fed speak, except for just before the Fed meets. He's speaking as well. Saying businesses are still largely pulling to the sidelines. People are waiting out policy uncertainty. And there's no evidence that the drop in sentiment is affecting spending. We do see markets pulling higher here. Again, careful whether or not this is a lower high yet. I don't believe we're quite out of the woods on this move. We do see some interest building in lower bids too, around 58.65. You can see 344 on bid there. Let's take a look around some of the other parts of the market here as the day takes shape. NASDAQ also having a bumpy go. Look at that. We also had that buyer exhaustion to start the day in the NQ contract, and that also helped to set off that wave of aggressive selling. Now, of note, we are seeing buyers getting more aggressive in this NQ contract. That's the largest delta buy bubble that we've seen since the market opened today. Let's look at some of the majors. Apple opened with a pop, but sold down to a new low, now consolidating. And looks like there's a lot of supply overhead, 4.3 million versus 2.1, delta of 2.2 million. So a bit of a heavy order book on Apple. Broadcom just consolidating after the open. Similarly, somewhat heavy order book there. Amazon pop and drop like Apple, but it didn't drop to new lows, now consolidating just below the point of control, and a somewhat heavy order book there. Alphabet shares popping and then consolidating off the open. I do like Google overall. I think Google of the Mag 7 is now actually set to become a more formidable leader in AI. It's kind of in Google's DNA, but the bigger thing is they've got so much data to train off of. It's remarkable. If you look at their VO3 model of all the really convincing videos that we can't tell are deepfakes anymore, the way it's distorting the difference between reality and simulation, they had YouTube to train that on. That's really the largest repository of videos on Earth. So no wonder they could build such a great model with the talent, but also with the data they have. Meta falling off the open, making a new low recently and consolidating a bit of a heavy order book on that one as well. Microsoft got a nice pop off the open, but pretty much gave that all up once it got into this supply up here. You can see we got into that large offer around 460, took it out, but buyers just kind of gave up the ghost at that point. So that's just telling you there's just not enough demand on the buy side, right? They kind of got scared away seeing all of that liquidity overhead on offer. And NVIDIA popping and dropping off the open recently, making new lows, consolidating a bit here, has a similar look as some of these others with a really large offer overhead versus the total bid, a delta of about 11 million favoring those sellers. Something to keep in mind here as we get into earnings tomorrow with NVIDIA is that it's had quite an impressive recovery off of its lows, but I'm not so sure that the company is 100% out of the woods yet. It's really going to be more about guidance than earnings. One tailwind for guidance, however, is those chip restrictions being lifted. That at least lets them be a little bit more optimistic because a lot of that pent-up demand from overseas could start to hit them. And Tesla continuing to make this push higher here off the open, making new highs recently. And this stock, just like NVIDIA, largely driven by options flow. 355 and 360 are big levels to watch in Tesla today. Then we're going to just quickly take a look at SPY. We can see there is a recovery off the lows. Still has the look of a lower high for now, but the buyers are getting aggressive here. So that is healthy. We also see the point of control getting pulled a bit lower and price pushing above it. That's also constructive to see. And we got pulled into this gamma 2 level, just starting to build some acceptance above it. But again, these large gamma levels can be a bit magnetic. Just going to take a look around, see if there are any questions out there. And we're going to get back to the S&P futures contract here just to take a look. You can see we're continuing to make that climb off the lows. That is encouraging. And there are much less sellers on the tape here. You can see that it's really being dominated more by aggressive buyers with those larger green bubbles. Climbing back towards that vol trigger level, point of control being pulled lower by the sellers, but price starting to push above it. And we do see a large offer overhead just around 58.92. So there is interest in upside from here. Also, if we're going to go back to the pivots, important to note we're testing the 58.83 pivot here and seeing some resistance so far. And of note, the Fed's Barkin has finished his interview on Bloomberg, so that's one Fed speaker down. We had durable goods earlier today. They came in just a little bit better than expected. Had home prices from the S&P Case-Shiller Index coming in about in line. And then we have Conference Board Consumer Confidence coming up at 10 a.m. That will be an important one to watch. Prior reading was 86. Forecast for this reading is 84. So I'll stay on for just a few minutes after 10 a.m. just to analyze the impact of that on the tape. We could see that pivot got absorbed, so there was enough volume to take out that pivot, meaning buyers really are starting to take control again here. But you can also see there's not really the same level of conviction. Starting to see some bigger buy bubbles showing up, but those sell bubbles, the pattern of continuation that we had there was definitely a larger desk de-risking into the open today. And we're starting to see some of the options flow coming in as well from the SPX Options Visualizer. And we can see that interest in calls, at least so far, is quite a bit higher from here. So we'll watch that as that takes shape. And we have a bit of a reprieve during the trading day from other Fed speakers. Looks like the next one's going to be 8 p.m. with the Fed's Williams speaking. I'm just going to go ahead and pull out the larger ES chart here. This is the intraday chart. I want to pull up a chart that's just a little bit broader, so give me one moment. All right, here we go. And so what you can see here, it kind of goes with what you're saying, Alexandra. So big volume in ES at 5,700 to 5,750, the low area from the drop. Any thoughts? Yeah, I don't want to see ES get below 5732.75. That's my major pivot down there. I think if we bust that area, we're going to come back and retest some of these lower lows. So for now, I think we're in a range. That range is between 5732.75 and 5997. And it looks like we're set to continue sort of consolidating here. But the way that I look at the volume profile and the transactional activity and some of these key technical points is I have these 4 pivots on screen. And I would be really concerned here if we break the 5839.75 pivot, because I think at that point, it's pretty much in the cards that we get back to Gamma 3, 5788.25. And if that magnet can't hold, it's right back to 5732.75 or pretty close to it. So that's what I'm looking for. If we do break below there, that's where there's some nasty room for continuation. You can also see the Ichimoku cloud twisting a bit bearishly as we get into summer, just kind of giving us a sense that bulls really need to take control sooner than later to make a push higher. And that push higher should be above 59.27 on a weekly closing basis, and hopefully, for their sake, above the cloud and into positive gamma, above that 59.57.25 flip. But for now, we're just sort of trapped in a range, right? Either side can take control from here. And the bulls definitely have an edge near term, but they need to lean into that sooner than later and make a push above 59.27. Yes, indeed. Definitely worth watching those gaps. Sometimes it can take a long time to fill them if they do get filled at all, but certainly worth watching. And the order book on the S&P is overall pretty constructive. You've got an excess of about 4.8 thousand on the bid versus the offer. Getting close to the high end of today's regular trading hours range here, which is marked by the vol trigger. Breaking below it earlier caused some pressure, some volatility. Now we're looking to retest that from below. And let's just take a look at the order flow here. We do have more orders coming into puts than calls, but not so much. And these are SPX levels translated into ES. Now, if we zoom out this chart a little bit, we can see that it's giving us a sense that, let me just pull up the other version of this chart here. So we could see there is a pretty formidable resistance area here, just around 5886.25. That's that next pivot. We could see it was support earlier, and we know in trading support can become resistance. So far, that seems to be the case. We're watching that 5886.25 pivot, and then the vol trigger above it at 5888.25. That's a confluence area that if we're able to push above and build some acceptance, especially if we get above the BGL on that move, that gives the bulls room to 58.96 pretty quickly. On the other side of it, however, if we continue to reject here, we may get back to these lows and test them. And this still looks a bit bearish, the pattern that we have going on. There's been distribution from really early this morning. Lower highs, lower lows has been the name of the game. So we're still in that micro trend. It is a micro downtrend from about, let's call it 7 a.m. on or 6:30 a.m. on. So going into this, the bulls had an edge, but then we started to see that edge fade earlier this morning. And the question is really, is a delay until July enough to justify the move that we've seen off the lows? Right now, S&P trading up 1.18%. And seeing some big volume coming into IWM here. So I'm just going to quickly move over to this chart. I know some of you folks trade the small caps as well. This was an absorption event. There were some sellers trying to lean into this larger amount of buying pressure here. You could see that box with the 48,000 that showed there was some attempted absorption. It looks like that was a failed absorption. And you can also see that most of the activity in IWM options is just around here. The bulls are quite a bit more bullish on IWM, looking for price to come up by about 2%. Don't know if we necessarily see that today. Some of this is layering on for longer dated positions as well. Let's also take a look at Bitcoin again. We had looked at that earlier. It got up to these highs. We saw some pretty chunky absorption events up here, and then it's been selling pressure since in Bitcoin, now retesting that point of control, rebasing. If you're bullish on this, what you really want to see is this consolidate above the point of control and then make another push higher. If you're bearish on this, you want to see this break below the point of control, make a new session low, and show some continuation lower. If we do break below the point of control and session low, I'm thinking that that brings us down to that 108 key pivot we had talked about earlier. Let's also take a look at gold. We'll just zoom this one in a little bit. You can see gold now making new lows on the daily session. Overall, the chart on a swing time frame still looks very constructive, but day to day, we can certainly still have some consolidation in gold. Let's go take a look at that. Yeah, that's interesting to see all of those orders down there, Alexandra. 5,800, another big area of interest as well, over 300 on bid down there. And if we zoom out even more, look at that, up at 6150, 502 on offer. So there's various interesting areas of interest on the order book. And it seems like momentum is sort of stalling as we get close to this event volatility catalyst that is consumer confidence. Sorry about that. Yeah, it's gonna look, we can see the order book lightening up a bit right here. This typically happens ahead of event volatility catalysts, which is why you've got to be aware of what's on the calendar if you're trading the market. Because when the order book thins out, that makes room for bigger moves with a smaller amount of volume. And it's already a very thin book. Order book depth of about 25K today on ES. It's about half of where I like to see it. And it's been low for months. So that just gives you a sense it takes less volume to move the market, which means you've got to be mindful of position sizing in an environment like that. And we're watching for that consumer confidence data. Prior read was 86. And we've got just about 1 minute left until that prints. We'll very quickly take a look at where we are in ES versus the pivots. And we can see we're starting to build above the gamma flip and the midpoint, which are shifting lower here. And order book liquidity has dried up quite a bit ahead of this event. Seeing a lot of call flow coming into Tesla here. And data should be coming out. Yep, here it is. We've got, wow, confidence of 98. Huge beat. Huge beat on consumer confidence. Seeing some seller or some buyer exhaustion there. Conference Board 12-month inflation expectations eased to 6.5% after spiking at 7% in April. Seeing a push higher on that headline, that is very constructive. Let's take a quick look at that report. Consumer confidence improved in May after 5 consecutive months of decline. The rebound was already visible before the trade deal, but gained momentum afterwards. So people are feeling a little bit better after seeing some of the progress on trade. That's really the takeaway. Now, whether that's actually progress or not is a whole other matter altogether. We have to see some deals come through. But that gave us cause to get a bit of a pop off that news. That led to 398 stops from sellers getting triggered. So that's 398 market buy orders that hit the tape there. That helped to push us to a new regular trading hours high. While this is all going on, we had seen some iceberg selling. It seems to be leveling off now. And we seem to have less interest in downside overall, with some interest in upside building. So we'll see how this goes. But overall, the tape is starting to look a little bit more constructive. And we also see more options volume building in that hot call strike around 5,900 SPX. That's at the Gamma 1 level as well. So that could be a little bit magnetic. So overall, good data, pretty constructive reaction. And again, the question becomes, is a pause enough to keep the momentum going? And one last note here, let's just take a quick look at Tesla with all that call flow hitting the tape. Boy, oh boy, isn't it exerting a magnetic impact on those Tesla shares. So the next level I'd watch real closely is 360 on Tesla, but that push higher, it really has everything to do with the flood of calls hitting the tape in Tesla, these near-dated calls helping to squeeze these shares via Gamma to higher prices. So folks, thank you for tuning in to this week's edition of Back to the Futures with me, Markets and Mayhem. If you want to learn more about my work, visit traderaid.com. And if you'd like to get a 40% discount on Bookmap, visit traderaid.com/bookmap, scroll down to the special offers, and take advantage while the offer is active. Thanks again for tuning in. I'll be back next week, 9 a.m. Eastern, for the next episode of Back to the Futures. Have a great week ahead.